we're going to have a look at yesterday's trades. And there's something that I think is really important that I want to cover in this video regarding our scalping strategy. Let's start from the top and work down. Yeah, and this is what I wanted to discuss when the initial break goes against. So what we're doing with this is we're marking up the initial range after the session opens. So if I click this, see how this has created a box covering the first hour. Generally speaking, any volatility is going to play out. Generally speaking, it'll play out as it did here. And usually around the session open, you'll find that it'll trade in one direction and then turn around and head in the other direction. So we allow the first hour, this box that I've just marked up here, for that to play out. Now, what I'm seeing now is that this is market manipulation. Right? This is a deliberate move down here to take out liquidity and to draw in buyers. This breaks above. The algos are set up to move the markets around like this. This draws in buyers and then they take them out. So a huge amount of stop losses are generated under here, right? And that's liquidity for big money. So with our strategy, we were looking at this initial range, this box that I just drew here, hoping to get through this initial period, but look what they're doing, right? So what we have to do with this strategy is, look, we don't know whether this is going to continue on. So I'm going to buy on this breakout. If it turns around and we get a break under here, a red break and a pullback with this red signal, we need to close this first trade. In this case, it would have been around break even, and then get involved with that. This is scalping. You got to be in front of your chart and you got to set the alerts. We've got all the alerts here for this. So that I took 3 trades yesterday that in the Asian session that played out like that. So anyway, let's just go down and I'll explain the rest of it. And look, worst case scenario here, we lose 1R, in which case you wouldn't have to, because you're entering another trade here. Well, actually down here at that level. So, you might close this previous trade, or you could leave it open. You could leave it open and just let 1R get taken out and be done with it, just in case, it does that. So there's no harm in losing that one to gain that. Okay, so you lose one, you gain 2R. We're talking risk reward. So you're up 1R with this scenario. And it's just a matter of waiting for the alerts, the signals to give you the entry. And, you can set a 2R target, 1 to 2 risk reward by default, and then look to close prior to this is the London Open kicking off here. So this one back here is the Asian Open. All right, so this is really important. Anyway, I'm going to be doing daily mentorship videos on this that will cover every one of these situations as we move forward. Aussie yen, this was a buy, and look what happened. It spiked up and then it dumped. And this is a case where you can look to close it on that signal. That's the exit signal. So you get an entry signal here. Okay, there's 2 signals. There's the bullish breakout signal breaking out of this box, and then there's actually this signal coming from the trend momentum sink. This is the signal coming from the trend momentum sink, this one here, that one. Right, so you take that trade, you can close it. You're going to set this alert here. This is the exit alert. So you've got an entry and an exit alert. You can do that. Then that's your next trade if you want to get involved with that. So generally, you're going to find the markets are going to run the stops and then trend, and look, it'll either do that, or, you could get messed around with a range-bound session, and that'll happen. But the amount of trades that you take, that trend will definitely override any losses, if this is just choppy sideways price action. Anyway, let's just keep going. Aussie dollar, that was another instance where we had a buy, and you can look to close it on this exit signal if you like, and then immediately thereafter it turned around and it went short. And again, you can close it there, or if it's still running, wait for it to turn green if you like. In this case, it landed into the London Open down here, and that was quite a nice outcome. Asian session, Euro Aussie. Oh, this was another one I took into the Asian session yesterday. Look what they're doing. It's brutal. Okay, but it just turned around immediately thereafter. So, you lose 1R, but then you gain 2R. Or in this case, 2.8. You may have closed at 2.6. You may have closed on that signal there. All right, so don't hold back. If it turns around, take the next signal. This is after the session open, because big money is looking for this to trend, generally speaking, and you'll be able to catch it. This one was a really nice outcome, and I mean, this is an ideal situation when you get the break and then you get the signal to enter there, and look at that. This one here, Euro Yen, that was a tricky one. Very messy price action around here. And we did get a red signal there. I actually just went through and marked up a lot of these just for the to just show you, what you can do with this. But yeah, that was pretty messy. It just wiggled up and down, and then finally sort of trended. Euro, the yellow ones, they were the trades I took last night. Okay, the yellow ones I took last night. I ended up closing a basket of trades as we were approaching, through the London session here, but that was a nice outcome if you held on to that. I generally like to close before we trade into the New York Open if I'm opening a trade at London. So let's just have a look through now at the trades I took last night. Euro pound. Yeah, see, I closed this one early. Why? Because look at the signals we're getting. It's telling us here, to get ready. This is our exit signal. So I ended up closing that one, in profit. I mean, we had a few of these, so I'm happy to close them up. What do we got here? We had a pound Aussie that was running. Yeah, I mean, this last one was just range bound for the rest of the time. Very volatile markets. Yeah, this is an example here of when it goes the other way, and then we just get involved with the next signal. That's a stop run, especially early on in the session open. Okay, so it's just a foolproof way to come out ahead. This one here I closed early into the New York session. It's scalping, guys, and we're getting alerts here telling us that it's overextended. Look at the pullback, and there's another one there. So that was the level that I closed at through here. This is a fantastic strategy, really is. My stops are way too wide again. This is ideal back here, tight stop. So look, let me just explain the stop loss and the strategy. I'm not following it entirely. I'm setting these wide stops, and I'm going to break that habit slowly but surely. But ideally, you're going to enter a long position. If this is your signal to break out, this is the initial range through here. It breaks the initial range, and you want to jump on that. Your stop loss, that's a 1.8. You go 2R by default. Let's just have a look. Let's just get rid of that. I ended up closing that one early as well through that level. So look, here's the thing. See this indicator here, right? I want you to look at this. There's two things. One, there's an up arrow, and there's also this green shade. See this green shade under here? The green shade is the up arrow is your entry, and your green shade is your stop loss. And it's coming off the trend momentum sink. Two things are going to happen. One, you're going to, let me just enable that. All right, see the box? There it is. Okay. One, you're going to break out of this initial range. That's the stop run. Okay. And you get this message, you get this thing here, bullish break. You want to take that breakout and entry. So you want to see it actually break and then maybe come back into it. Here it didn't really do that. In any case, stop loss here, entry here, 2R target by default, and or close when these exit signals fire before the next session opens. That's it. As simple as that. Trying to make this easy to follow, keeping it simple. Closing it into the New York session again. Yeah, but my stops are way too wide. I'm slowly coming around. If you don't want to follow the green shaded zone, just go with this here, the box. Nothing wrong with that. Stop loss at the base here. Guys, look, there's a 14-day free trial. If you haven't jumped on board, the link is on my website, anthonyfx.com. Take it up, and this is my recommendation to you. Trade this for a week, 2 weeks on a TradingView paper account, zero risk, no risk whatsoever. And in that 2 weeks, get profitable on your paper account. Then, again, don't risk your own, risk your own money if you like, but once you see that this is working for you, open a prop firm account. Spend $100 on a, I don't know, $10,000, $20,000, $25,000 prop firm account, and you earn 80% or 90, depending, on profits. So you don't have to put 20 grand in to make that kind of money. What you can do is you can trade. I trade a Pepperstone account in TradingView. This is how you can trade a prop firm account. I use this for my signals and my trades. This Pepperstone is a C-Trader account, and you can actually set this up as the master account in a program called Duplikium. Duplikium is a trade copy program, right? Duplikium or Traders Connect. Set up the Pepperstone C-Trader account as the master account, and then set up multiple prop firm accounts in there as slave accounts and copy from this TradingView directly across to your prop firm account, multiple prop firm accounts. This is powerful, guys. Please listen to what I'm saying. Take 2 weeks, get profitable with this strategy, and you're on your way. Okay, look, over here in Discord, I recommend Focus Funded. They're owned by an Australian company, Australian broker, Focus Markets. Okay, you can set that up in Duplikium as a slave account, but make sure you pick the right platform that's integrated with Duplikium or Traders Connect. Okay, so it needs to be a C-Trader account, MT4. Okay, make sure it's compatible. So you can go over to Duplikium and ask their customer support, what type of accounts are compatible. That's it. Look, if you want more help with this, just reach out to me, guys, and I'll send you some links and some information. So anyway, let's get back to it. But yeah, definitely think about what I'm saying here, guys. This is a really unique opportunity, and we've got everything here we need to really knock these markets on the head. Here we go. I close this one. So you never know if it's going to continue or take a dump. So basket of trades, I'm happy to knock it on the head. I've mentioned this in previous videos, old habits. I've been trading for too long, and I'm used to setting super wide stops, daily time frame, way down here somewhere. It's taking me a while to let go to tightening up my stops, but yeah, it's happening. It's happening. All right, so what else did we have yesterday? The yellow ones, we had XAG. I closed these guys early. There you go. See, not a bad call. You just never know. The markets are so volatile. And I want to show you something about that. This is really important. Why are the markets volatile? Why is it difficult trading at the moment for most people? This one I closed early as well. So yeah, pretty close to break even. I knocked that one on the head. This is the ideal scenario right there, okay? But it's not always going to be peaches and cream, but we've got the tools here to really smash these markets. And again, guys, click on the link below, jump on board and snap up this opportunity. If you decide it's for you after the 14 days, it's only $29.95 a month. It's ridiculous, right? I'm really wanting to share what I have with people. I think there's a need for this in the world. Grab it and run with it. I'm going to be increasing that at some stage in the near future. So, lock it in, $29.95 a month after your 14 days. Just shut me lunch. That's it, once a month. You jump on board with that and you lock it in. So this is what we're up against. Let me show you something. The volatility index. Let's go here, do that. We're going to go to a daily time frame. Look at that. We are in a pump and dump trading environment relentlessly. This is a daily time frame. Now come back over here. Back over here is the period prior to the Bank of Japan rate rise. Look at that, Bank of Japan rate rise. They bumped it up 25 basis points. Back here, prior to that, with zero interest rates, trading was incredibly predictable. The volatility range was really limited. Right? That was the good old days, right? And then what happens? The BOJ rate rise occurs, and then we get this pump and dump trading environment now that we're currently in. And this is what is causing problems. We've got Trump in office. We've got all these Trump's tariffs and political chaos going on at the moment, geopolitical issues. And, that's causing this very unpredictable market at the moment. I've had to come up with a way to trade through this volatility and come out in front. So the old days of an intraday set and forget are over. Stops are getting wiped out left, right, and center with this kind of movement, this price action. We have no option other than to adapt. So that's what this whole thing that I've been developing over here is all about. And it's really only come together in the last week. So at the moment, this is still fairly new, but it's showing a lot of promise. And in this particular configuration, using this indicator here, this is tracking multiple time frames and looking at, buying and selling volume within those time frames coming together and, giving us a fairly high probability signal pretty much. Okay, so we're using that trend momentum sync. That's the main indicator that we're using at the moment. But, you've got to tie it in with a strategy, and it's around the session open times, trading after the first hour and looking for this opportunity. And again, as I mentioned, sometimes it's going to do something like this. It's highly manipulated, right? But we can take advantage of that. Take that trade, let it go, and take this one. Yeah, we've got the tools. So with that, love to see you on board. It's free, 2 weeks. Develop your strategy, get good at it. Trade a prop firm account if you like. Okay, with that, have a great day, and we'll see you in the next one.